You're listening to A Deeper Dive, a part of the Winsight Podcast Network.
What should your restaurant promote in the coming months? Hello, this is Jonathan Mays, Editor-in-Chief of Restaurant Business. And in this week's episode of A Deeper Dive, I speak with David Maloni, a commodities expert, on projections for commodity costs in the coming month. Think more chicken sandwiches and fewer burgers. Beef costs are going up and will likely stay there for a while. David talks about why that is and how long it could take before those costs start coming down. Think more along the lines of years and not months. We also talk extensively about chicken prices and why those costs are so cheap, particularly relative to other commodities. And we talk about other commodities such as pork belly, grain prices, and my favorite, cheese. We're talking food costs on A Deeper Dive, so please have a listen. All right, we are here with David Maloni. David, welcome to the podcast.
Thanks for having me, Jonathan.
All right, David, what you been up to lately?
So I started my company, Datum FS, roughly a year ago. Commodity analytics, forecast, but also supply chain consulting for the industry. My passions, as you know, we've known each other a long time.
Mm-hmm. So let's chat about commodities because
Sure.
I hear a lot of different things. I'm going to start off with chicken because you just wrote about that not too long ago. What's going on in the chicken markets right now?
Well, the chicken markets are down pretty hard from last year. I like to say the cure for high prices is always high prices, right? But we've seen them start to find some support as of late, and one of the producers have certainly pulled back on production domestically a little bit due to poor margins. But you're also seeing competition with beef. I mean, beef prices are very expensive, and I'm sure we'll talk about that more in a minute. But chicken is at some of its best values, at least at the wholesale level, compared to beef that we've seen ever, to be honest with you. So, and that's a story that will continue probably for at least the next 18 months to 2 years. So, a lot of opportunities with chicken here going forward, I believe.
Yeah. What pushed down chicken prices like that? Because chicken is pretty high demand item right now. One would think at least that would provide some strength in price. What happened?
Well, first you have the high prices, which you always high prices discourage consumption, encourage production, right? Mm-hmm. And so we certainly saw that encouragement of production and some discouragement of consumption, right? And so prices were quite honestly, they were too high last year, right? They really were, and now due to high feed costs, I mean, margins are pretty tough for the producers and have been for several months. And, just like the high for cure prices is always high prices, the cure for low prices is always low prices, right? And you're starting to see that discourage production. And like I said, the value in chicken to beef is pretty much unprecedented right now. So you're starting to see it strengthen.
Mm-hmm. So before I ask you about beef, I always got to ask about chicken wings because that's my favorite commodity. Always my favorite commodity. Going back for ages, just because it just seems to act on its own. Just in weird. It doesn't even. Correct me if I'm wrong, but it doesn't always like you would think it would follow chicken, right? Like if like chicken breast increased, you would think that chicken wings would just go crazy, and that doesn't seem to always be the case. Where are chicken wings at right now?
Chicken wing prices are very inexpensive historically, just north of $1 a pound, but you're already starting to see some promotion activity on chicken wings occur, and boneless wings for that matter. Chicken breasts are relatively inexpensive too. The chicken wing prices we've experienced now, and we're up about 20% in the last 2 months, but we're still historically very inexpensive. These could be some of the least expensive chicken wing prices we see for the next year or two.
Oh, wow. All right. So,
yep.
Yeah, I mean, that's
again, the value compared to beef, right? I'm with you. I love chicken wings, right? Chicken wings are a very celebratory food item, right? They're fun. My kids love them, right? I think they're primed to be heavily promoted here, especially in the food service industry over the next, probably at least the next 6 months.
Really? Yeah. Yeah. I mean, we're getting
Yeah.
into chicken wing season. But there's still, so it's interesting because you're probably going to see like an increase in chicken wing prices over the next few months leading up to the Super Bowl, which is totally seasonal. But just over $1 a pound. I can't remember the last time it was that cheap.
Yeah, it's been a little while. It's
Mm-hmm.
been a little while. I mean, we were north of $2 a pound last year, so it's certainly an historic value. And when, we'll talk about beef in a second. When you look at chicken breast and chicken wings compared to hamburgers, I mean, you're talking about a wholesale price difference of a pound, well north of $1.
Really?
And that is really historically, right? And so there's a lot of incentives to feature chicken wings, chicken breasts, not as much tenders, but still incentives there for tenders as well.
Mm-hmm. And I would imagine that some of these chains, particularly these chicken wing chains, I mean, chicken wing chains like Wingstop should be pretty in pretty decent shape from a profitability standpoint, given the fact that they've raised prices so much over the years that that when you see costs go to that extent, that's got to be pretty nice for them from a profitability standpoint.
Yeah, it certainly helps, but I don't know if you know this, but over the last 2 years, I became an operator. I own a restaurant in Sarasota.
Mm.
And it's not, as every operator will tell you, it's nice to have those commodity costs coming down, but the labor costs are not. They're still going up, right?
Mm-hmm.
And so it's still tough.
Yeah, yeah. So what kind of restaurant when did you become an operator? I didn't know this.
So almost 2 years ago, I own a restaurant downtown Sarasota. It's been here for 30 years, coffee shop bakery, kind of iconic brand, right on Main Street, 60 seats outside, called Pastry Art.
Okay.
So bakery, coffee shop, etc. It's fun. We're the principal investors. We don't really operate it, but
Okay.
we certainly watch foreign budgets and watch where the money goes.
All right. So you decided, what made you decide to make that leap?
Well, I had left the prior company, and quite honestly, my wife and I love where we live in Sarasota, Florida, and was being presented with some opportunities outside Sarasota that maybe scared us a little bit. So we thought about buying a business in town. What kind of anchor us here, right? May not have been the best financial decision I ever made in my life, Jonathan, but actually, it's been a lot of fun. We do some cool things for the community. We're really a community haven. We do a lot of work with addiction recovery, a lot of work with the homeless in downtown Sarasota. So it's really good personally for me and my family.
Yeah. Restaurants are fun business. At the end of the day, that's what this is about. It's always about fun. Like, even if you're starving and you need to head to McDonald's on your way home from work. I mean, that's just that there's that little bit of somebody's doing the work of making your dinner for you. And so there's always a little bit of, a fun. It just makes this business, it's just a fun business, period.
Yeah.
That's what's so great about it.
I mean, one of the most intimate and holiest things we do as society is eat together, right? And to participate in that, we view it as an honor, right?
Yeah, it's a great business. All right, let's talk beef. That's what's going on.
Well, we had the cattle supply is declining. It's declined for 4 straight years. The principal drivers of that have been drought in the Southern Plains. So you think Texas, Oklahoma, etc. When you have drought, it's very hard to build the herd because you just don't have the grass to feed them. Right? You can supplement with hay, but if you can't grow grass, you pretty much can't grow hay, right? So it's tough. It becomes very expensive, and then you have inflated feed prices, which from the feedlots can decrease demand for the animals, and that kept prices artificially low. And lo and behold, you got poor margins, so they start decreasing the herd. So there is no indication, at least as of yet, that herd decline has stopped. We did see moisture conditions improve during the spring, but the outlook, it's starting to get dry again in Texas, and it's expected that drought's expected to expand over the next 3 months. So, it's going to be a couple of years before, it's going to be at least a couple of years before we start seeing improvements in beef production. And beef production is going to be low next year, really low. It's low this year, but it's going to be really low next year.
And to explain, so like beef is, really has got a couple of year cycle. Yeah. I mean, so if you could explain for people why it could, so in other words, we're probably a couple of years into a high price beef environment. Yeah. Can you explain why that is?
Yeah. So even if they started building the herd today, right? By the time you make those decisions and you start retaining, even the short-term impact of building the herd is decreasing beef production because you start retaining more cows or more animals to breed. Does that make sense? As
Yep.
opposed to sending them to slaughter. So even if we did even if we are building the herd right now, it's likely at least back half of 2025 before that, because of the site. By the time you grow the animals, send them to feedlots, etc., that's like a 2-year cycle, right? So, it's more likely probably 2026. And, beef production next year. I mean, current beef production estimates from the USDA have at the smallest level since 15 and the third smallest level since 05. But if you look at it per capita beef production in the United States, currently it's forecasted by the USDA to be the smallest since 1952.
1952.
1952, which predates you and I, buddy.
Yeah, a little bit. So what does, so we're probably in a pretty long run up for prices here for a while. Do we have any sense of how long that might take?
I mean, the cure for high prices is always high prices. And the idea, again, is to discourage consumption. It's going to be very hard for it to encourage production in the short term, right? Yeah. So I would say that beef prices are going to remain a problem for at least the next 18 to 24 months. Yeah. And it's probably closer to three years.
Wow. Yeah, I mean, the problem with beef, as you know far better than I do, the problem with beef, unlike say chickens, is, like we had, you have high prices in 1 month, and then like in 4 months you can recover very quickly. Beef, it takes years, and you have to have it just takes years to rebuild the supply of beef, and so essentially when you're in a cycle like this, it takes a while to rebuild. And it's kind of to me it can be very frustrating when you get into environments like this, because you're just going to have high beef prices for a while.
Yeah. I mean, the good news for the industry is chicken is relatively inexpensive right now, and provides a tremendous value, and that's why I'm at least very bullish on consumption for chicken over the next 2 years. Which should be supportive of prices. I mean, the two big ones for food service are beef and chicken, and beef is extremely important, but the beef is king, I like to say, but chicken is extremely important and gaining in popularity, particularly for the younger folks.
Yeah. Yeah, chicken is still the fastest growing. It's still a very fast growing commodity in the United States. It's increasingly popular on the chain front. Right now, if you start thinking of the top performing restaurant chains in the United States, the 3 of maybe 5 chains that you come up with are going to be chicken chains. One of them is going to be Raising Cane's, which is the best performing chain on a square foot level in the United States. The large chain anyway. Chick-fil-A, which is the best per store, and then you've got Wingstop, which, by the way, just happens to kill it on a regular basis. We never talk about Wingstop nearly enough. So, and most large burger chains could probably shift to chicken, and we already hear that from, Burger King and McDonald's talk about it all the time. By the way, Burger King coming out with new chicken wrap sandwiches this week. So, Yeah, I mean, it probably makes a lot of sense to go shift to shift to chicken for sure over the next couple of years.
Yeah.
That's what consumers want anyway. So now I also read something you read on pork belly.
Yeah.
So in other words, your bacon is going to be more expensive too. Yeah, what's going on with pork belly?
Well, yeah. I mean, this has been a pretty quick run up, and
Mhm.
commodities that typically that go up fast have a tendency to come down fast. So we'll say that. But, pork bellies have gone from like 80. Pork bellies is the primal from which you make bacon from, and pork bellies have gone from like 80 cents a pound to north of $2 a pound over the last 6-8 weeks or so. Um, Part of this is what's going on with Prop 12 in California, uh,
Mm.
as far as limiting the regulations around pork production and what kind of pork they can sell there. There was some confusion around that. Been some dates, and there's still some confusion around it, but there was some relaxation of dates, which encouraged some, uh, let's just say, production and inventory building. Okay, in California, so I think that's part of the surge. But again, I mean, the cure for low prices is always low prices, and you're starting to see retail feature activity jump quite a bit on bacon. I don't expect that to stay up at these levels for a long time. I think we will moderate uh, those price levels, and bacon will be more expensive next year than it was this year. But there's no indication that bacon prices are going to run away from us for an extended period of time. At least,
Mm-hmm. Mm-hmm. Now, because there is a lot on the pork front with regards to. I mean, I think there's a couple of states that are looking at rules on gestation crates and stuff like that, and
Mhm.
a lot of talk about the potential impact that can have on pork prices. Does that have it? Does that stand to have a significant impact on pork prices going forward? If assuming we see more states adopt the
Well,
rules.
um, I think that it has a significant impact in those states
Mm-hmm.
at the wholesale level because it, and I don't want this to come off the wrong way. I'm not saying it's right or wrong. I'm just saying it just makes production more challenging for producers,
Yeah.
right? And in some cases, those producers are likely to limit their production there or limit their supplies there.
Mm-hmm.
So I think particularly in those states, it could be problematic where potentially it could benefit costs in other states. That makes sense.
Really? So it could drive actually lower costs in some states.
I think that the product will go and be produced where it is most uh, behooves the margins involved for all parties. That makes sense?
Mm-hmm. Got it.
Yeah.
Yeah,
Yeah.
makes sense. Sure. All right. All right. So we've had a pretty I don't know if you know this, but it's been hot out this summer. Yeah. I mean, we some of the temperatures
Yeah.
seem insane. Any impact? Is that having any sort of impact on any commodities going forward? Any concern there?
Yeah. So, yeah, I mean, the grain crops are certainly have been a challenge. And this is a big year for grains, and it's something that everybody should be watching very closely right
Really?
now. We've had inflated grain prices, and that's important because grains or feed are one of your principal costs for the major exposures for the restaurant industry, which are protein and dairy. And you know, we went into this crop year very optimistic about how it was going to be, how what yields were going to be, et cetera. For no other reason than we're due, right? We're due. So, and the El Nino um, setting in typically is a little bit more favorable for weather. We had an extremely dry, hot spring. Some of the smallest rainfall in many of the major states in the Midwest that we've seen. It's since improved,
Mm-hmm.
uh, but crop ratings are solidly. So the USDA comes out with crop ratings every Monday, and they rate in 5 categories. And typically, I pay attention to what's in good to excellent condition. But crop ratings in good to excellent condition are tracking in the for corn and soybeans are tracking in the 50s. So 50%-ish, 55%-ish, right, is rated good next to condition. 5-year averages for this time of the year is up in the low 60s. So we're still subpar. And that 5-year average isn't a very good number because we've had some challenges the last 5 years. So I'm not comfortable yet with these crops. Although the markets have come off quite a bit over the last 8 weeks or so, I'm not comfortable yet. And it will be important to monitor for sure as we try to get into this harvest in late this month and into September, October.
Right. So we have to have, in other words, so the weather, because the weather, like I live in Minnesota and we definitely had a dry spring, my goodness. But, the summer's been, much better from that particular standpoint. And, we've gotten some rain. My grass looks decent.
Good.
But, so that's how I judge. I don't farm anything. But, so in other words, if we continue to have, more rainfall, that should keep, that should continue to improve those markets, right?
Yeah, it should. It should.
Right.
But we have to get it.
Yeah. Right. Yeah.
And the baseline right now isn't very good.
Yeah. Right. Okay. So, all right. Any other commodities that we should be, or any worth talking about?
Well, I think you got to monitor cheese, particularly for your pizza chains out there, right? Cheese prices have jumped quite a bit as of late. The herd is starting to decline again, and part of that is due to inflated cattle prices, due to what's going on in the cattle herd. So cheese is going to be important to watch. I mean, milk production gains could be tempered next year, and so that could be supportive of cheese at times. Fry oil, soybean oil, vegetable oils going into just because of the soybean situation, and what's going into salad dressings, fry oils, etc. I mean, that's going to be important. That's going to be important to monitor. We have. I mean, but the grains will be key. How we finish this year, and then you're going to have this underpinning, issue of Ukraine, Russia. That doesn't seem like it's going to be solved anytime soon. So that will be extremely important.
Hasn't the market adjusted to that yet? Or I mean, it's been so long. It's been so long.
Yeah, I mean, it has, but it's expensive, right? And so even though I say, to give some perspective, even though corn prices have come off quite a bit, they've come off from the mid sixes, so to a bushel. So, let's call it 650-ish a bushel down to 520 a bushel. Probably a normal level for corn is closer to $4 a bushel, right? Maybe even sub a little bit of that.
Right.
So we're still historically inflated.
Yeah. Right. All right. Cool. Sir, this was actually one last. So if I have one conclusion from this entire conversation, it's less bacon cheeseburgers and more chicken sandwiches on your menu.
I think that's a great assumption.
Got it. All right, sir. This was fantastic. Yeah. Really appreciate you joining me on the podcast.
Always a pleasure, Jonathan. Thanks for having me.
And that should do it for this week's episode of A Deeper Dive, which was edited, as always, by Kimmy Kazmarek, artwork by Nico Hines. You may find this on other episodes of the podcast on our website at www.restaurantbusinessonline.com/article/deeper-dive. And you may also find them on Apple Podcasts, Spotify, and anywhere else you get your fancy listening shows. I'm Jonathan Mays, your host, podcast producer, and the editor-in-chief of Restaurant Business. Thank you for listening. See, much better.